Hi, this is Don Durrett, Gold Stock Data. Doing a video podcast with Abrasilver, get an update from them, ask them some questions. I think a lot of people are interested since they have a really nice project down in Argentina, and it just seems to be getting better and better. So I have John Miniotis and Dave O'Connor uh, with me today. The CEO, John's the CEO, and Dave's the geologist. And so we're going to start off today, and we're going to let John do a little overview of the company, and then I'm going to jump in with questions.
Perfect. Oh, thanks very much, Don. It's our pleasure to provide you and your viewers with an update. Like you said, I mean, a lot has changed here, and honestly, the more we're drilling, the more we're finding, the better this story is getting. And so, just to provide a high-level overview, as many as you and hopefully many of your viewers are aware. Our project is called Diablilos. It's an advanced stage exploration asset, silver and gold, in the Salta province of Argentina, which is a very mining-friendly province. Last year, we announced an updated resource estimate, which in the measured and indicated, we have 90 million ounces of silver, 1 million ounces of gold. This is located all of it close to surface within one conceptual pit, and very good economics here. And we also updated the economic study later on last year. So this was in November, where based on $24 silver, 1650 gold, we have an after-tax rate of return from the single pit of just over 30%, with very good size, good scale. You can see producing on average 11 million ounces a year on a silver equivalent basis. At very high margins. So your all-in sustaining cost for the first 5 years is less than $10.50 an ounce. So even at today's low prices, this project would still generate very good margins and a very good rate of return. Now, since this estimate and since this study was announced, we've been busy drilling. The drilling has not stopped here since the 2.5 years that we've been involved. And we've been consistently intersecting world-class drill results. And we don't say that lightly. We're not trying to be promotional, but that's just the facts. I mean, we have a slide here shortly that will show you when you look at over the last 2 years and you rank all the best silver intercepts throughout the planet for any primary silver asset, and you do that on a grade thickness basis, you multiply the two. Out of the top 8 best in the world, we've encountered 5 of those. And so we've been dominating the charts here with hit after hit, especially from our high-grade Tesoro zone. But importantly, this still remains open along strike. So you have a 2-kilometer strike extent here, and we're making new discoveries even beyond the pit. So very, very exciting exploration potential here. And Dave, our chief geologist, will walk you through that in a bit more detail shortly. Just skipping through some of these next slides. I mean, market cap's currently under 160 million, still a very good, strong cash position. This was at the end of Q1, we had about 17 million. As of today, closer to 13 million cash Canadian, which is enough cash for the next 12 months here. Based on our current spending rate, which the exploration budget's $5 million US. So we're still a good cash position here. And again, strong supportive shareholders. This slide just shows you where we're located in Salta, and then other projects. I mean, there's billions of dollars of investment activity on the mining industry being poured into Salta at the moment. Green boxes represent projects that are currently under active construction. And so all these are lithium projects, but there's over $2 billion of construction activities going on within, say, a 100-kilometer radius from us. So this project already has excellent infrastructure, all-weather highway, gas pipeline. There's 2 new airstrips nearby. And so we feel strongly Diablilos will be the next project to enter construction. And we're under 2 years away from, say, making a construction decision here. Just quickly looking at the resource estimate, we have 40 million tons. Again, this is within one conceptual pit. and all located close to surface, cyanide, so there'll be agitated leaching here, straightforward processing. But again, this is from last year. Since then, we've announced some world-class exploration success. So we expect both the tons and the grades of both silver and gold to increase when we come up with our updated resource estimate, which will be in October here, so coming up. I'll skip ahead to some of these slides just so you can get a better visual representation of what we've been focused on over the last years. And so this shaded area represents the pit, which hosts the existing resources, 90 million ounces of silver, 1 million ounces of gold. Now, we've been focused on several areas within the pit, on converting some waste that was previously classified as waste, very close to surface, into gold mineralization. So that's, of course, going to improve the strip ratio. From the Tesoro zone, which is the highest grade core of this ore body, we've intersected, again, some phenomenal intercepts, including one that we just announced this morning, 155-meter intercept of close to 300 grams. And that starts very close to surface. And the next slide will show you that.
Can you, yeah, let me interrupt and ask some questions on this slide. I think it's an important slide.
Yes.
Okay, so the PEA, can you show me, because you got 4 circles there. Can you show me which area is included in the PEA on the circle?
So it's this entire shaded, so it's the single open pit. So we've been drilling within that to define the resource better. And then we've been drilling outside of that for the northeast. So this northeast was not part of the pit. It's outside of the shaded area. There was no resource here last year. There will be one coming up. But yeah, the PEA and the existing resources all within the shaded area.
Okay, so the shaded area, there's actually, I think, 2 shaded areas. There's a dark gray shaded area, and then there's a light brown shaded area. So are you saying that you say the entire shaded area? So
Yeah,
I see that dark gray, that's definitely all shaded, right? The dark gray.
Exactly. Yeah.
Okay.
So if you can
And
see
then
my
above,
cursor, I mean,
and then
it's
above,
the pit here. I mean, we're showing silver, which is a bit deeper. I mean, closer to surface, you have this gold mineralization. It's a shallow gold mineralization. And then beneath that, you're getting into the silver and gold mix.
yeah, sorry, I'm trying to get an understanding of what is currently in the PEA. So you said all the shaded area is
Yes.
included in the PEA, right? So as you move your mouse over the gray area, let's not use shaded, let's use colors. Okay, so the gray area is all included in the PEA, but you're adding additional drill holes in that gray area, right? So that area, I thank you for nodding. So that gray area is actually expanding in size right now, but it is included in the PEA. So that pit is basically part of it. Now, above that gray area, we have some light brown. Yeah, that area there, the circle, and that's included in the PEA as well, correct?
Of course.
Okay, and so to the left and the right of that, we're adding ounces. Okay, so basically you're not really expanding the pit per se. You're just finding more gold and silver in the pit. Is that correct?
No.
Both. I mean, we're finding more gold and silver.
I'm not talking about the non-shaded area here. I'm just
within the shaded area.
Within the shaded area, within the PEA, you're adding ounces. That's my point, right? Okay, so, and you're adding significant amount of ounces. Now, these drill holes that you've been announcing over the last year, a lot of them are inside the PEA area, correct?
Yes.
Right. So that's important because basically that will improve your cost dynamics, right? Because you're going to mine it all anyway. So now you're finding more. So that improves your cost dynamics. And then you're finding a lot outside of the pit as well, which is going to expand the pit, which is going to grow. Okay, great. I think we covered this slide. Let's go to the next one.
Okay. Yeah, and then I guess similarly here, so you can see. So here, I mean, it's clear in gray. This is the pit. This was the Whittle pit. So designed as part of the PA. So we're finding additional ounces beneath that, and then clearly outside of the pit as well. So in this northeast zone, we've been focused. We've hit several. I mean, you can see dozens of high-grade gold intercepts out towards the northeast. That's been the primary focus outside of the pit up until recently. And I say that because just earlier in August, we announced this hole 19, which was a spectacular surprise for us, to be honest. I mean, we've done no drilling out towards the southwest. We thought the mineralization narrowed out in this direction. But we drilled a hole 500 meters away from the pit out in the southwest zone and hit 87 meters of 350 grams silver.
Yeah. Let me go
close to surface.
Yeah, let me go ahead and interrupt and ask a couple of questions. First off, I want to tell people that that is a huge hole. That's not a good hole. It's huge. It's massive. So that hole alone, I mean, my God, I mean, it's unbelievable. 87 meters at 346. So my question to you, I have two questions. One is, between the PEA shell and that hole, how many drill holes have you done there between them? And second question is, what's the deepest hole you've drilled so far to date?
Okay. Well, between the pit and that hole 19, there's been zero drilling historically. Since this hole 19, though, we've now drilled 5 holes in this area. And so this is an area that has not been explored up until now. Hole 19 was a discovery hole. We've since drilled 5 holes. I mean, we're waiting for the assays, so we don't have those results back. We expect to get those back probably in October. And so we're now drilling systematically between this hole and sort of the pit. Dave, I guess what else would you comment there?
Yeah, I mean, the theory was that the mineralization stops at the margin of the pit. In actual fact, it stops before the margin of the pit, because that pit shaded area is the surface projection of the pit, and the mineralization actually, of course, is around about between 50 and 150 meters deep at that point. So those intercepts there, the actual gold the gold and silver mineralization goes up to those. Didn't quite go up to those gold stars, and so those gold stars have expanded the mineralization within the pit, not within the pit, but beyond the pit. It doesn't look like it there, but it'll expand the pit margin towards the southwest. What we did was, we took an exploration hole. We had a look at the geophysics. Everything from the southwest of that is covered with colluvium. There's no outcrop at all. So we did a magnetic survey, and we got a magnetic anomaly which strikes west-southwest, and we decided to test that mag anomaly with the hole 19. Hole 19 got that great result, and so when we looked at the core from hole 19, we said, this looks very well mineralized, and it had visible silver mineralization. So we thought, well, this is obviously a hole that needs to be followed up. So we drilled 2 holes, one to the east and one to the west. And then we said, okay, let's stop there until we get results back. When we got results back of hole 19, we then said, right, let's really get into this. And so subsequent to that, we've drilled another 2 holes, one to the north and one to the south. And, we were waiting for results of that.
All right. So Dave, do you think that this is a new pit, or is it extending from the existing pit?
Well, I'm not sure. I think that the structure that has been hit with hole 19 and the holes around it is another west-southwest striking structure. You can see the structure of those.
Hey, great.
Of those bricks.
Great. And I think you might be right. My second question I had previously is, what is the deepest hole you've drilled so far?
It's
600 and something meters.
No, in the southwest zone.
No, the whole project.
Oh, the whole project. Okay.
Yeah, how deep has that gone?
It's 600 and something meters, and we just drilled a couple of holes to that depth to see what was underneath the oxide mineralization.
All right, great. So the reason I'm asking that is to get a feel if all the drill results that you've done so far are basically open pit. And it sounds like they are. So this is basically, so far, it's just an open pit project.
Yes.
So in theory, down the road, it might be underground, but as of now, all the resources considered open pit.
Exactly.
That's right.
All right. So I'll give you a few minutes to finish up the presentation, but then I want to go to questions.
Okay, yeah, I skipped this slide. I think this is very important. I mean, this is, again, right, we mentioned this. I mean, if you rank all the silver intercepts globally over the past 2 years, so all of last year and this year to date, and you rank them on a grade thickness basis, I mean, you can see the results we've been encountering, just consistently incredible world-class results. And so we have now 5 of the world's top 8 best intercepts, and you can see the details down here. We're hitting this 130, 140 meters downhole. So very, very shallow in oxides. This latest one that we just announced again this morning, I mean, down 70 meters downhole. I mean, comes even closer to surface. So hitting some phenomenal grades. And that's why we're very confident. Look, the resource is expanding here within the pit. But then importantly, now we have a new discovery outside of the pit as well, which is now the top priority going forward. And so, you know, I'd say right now, the outlook has never been more promising in terms of, you know, exploration upside potential. It's, you know, I think we've clearly demonstrated this project has significant.
Yeah, absolutely. I mean, it's clear as day that this project's undervalued and it's getting more valuable every day. I mean, that's obvious to any investor that's in gold and silver. You can see the PEA. You can see that I think the cost is actually improving. Your PFS is actually going to improve because you're finding more in the pit, in the shell. I mean, it's pretty obvious, right? But what we want to get to now is we want to look at, you know, valuation, and we want to look at goals and focus. So.
Perfect. Yeah, so that's an excellent segue into this slide right here. So valuation.
Actually, now I wanted you to do your presentation for 10 minutes, but it's actually been almost 20. So I want to get into valuation and question focus now, so we can really, you know, get into this here. So all right. Let me see if I can bring this back up. So my website and the people that follow me, I've been doing this for a long time, but we do this to basically go for outsized returns. Most of the people that follow me, you know, we're not really interested in annual returns because the gold and silver mining space is a speculative space. It's very risky. Anybody that's trying to make annual returns is really wasting their time. So we don't really, from my perspective, I'm not really interested in making 100%, 200%. Some people, we see this thing, let's go make 100%. Let's go double our money, you know, triple our money. Some people do that. But the people that I am after, we actually look for greater than 200% return. So that's really what I want to get into here. I want to get your feedback. I created this chart last night or yesterday to get your insight on it, because I want to, from this, we're going to get an idea of where you're going as a company. So the top of this chart is a company that's basically wants to sell their project. So it's all based on plausible reserves. So what a company is going to pay for you, you're basically selling it in situ value. So right now I have your plausible reserves at 105 million, which I think is very conservative. I think your PEA is 128 million. You want to mine for 68 million ounces for 16 years. So I'm very conservative here. So I'm using a spot price of $20, which gives a revenue of 2.1 billion, 10% in situ. So basically you're only going to get about 10 to 15%. You're lucky if you get 15% in situ. So you have a market cap of 154. So as of today, your premium is 36%. If somebody wants to basically pay 210 for it. My first question to you is, I don't think your company's for sale at 210. Am I correct?
Yeah, absolutely. You're correct.
Okay, great. And I'm glad you're laughing. I'm glad you're laughing, because you should be laughing. So my second question, so that really shows, okay, look, we are going to drill this thing because 210 is not enough. And right now, all we're going to get is 210. Maybe somebody might pay 50%. But nobody's really going to pay over 50% premium. So now if we're going to stay at $20 spot and we're going to bump it up to 125, which is still conservative. So if somebody thinks, oh, you know, it's really 125, I'll pay a 62% premium and see if they'll bite. So now we're at 250 million. Are you for sale at 250? And I think 250 is a legitimate number right now for somebody to offer you.
So for your reserves there, though, I think like you need to do this on a
125, right? 125.
So the economics of the project are 52% silver, but 48% gold. And
Okay.
so are you ignoring?
This is AGEQ.
Oh, because we have already 165 million ounces silver equivalent. And so
yeah, so
we're looking to expand that. I think
I'm being conservative here. I think maybe I think you might have 140 M&I right now, AGEQ. I'm just using these conservative numbers. I'm basically saying that, reserves, because you got to turn that M&I into reserves, right? I think as of today, as we're speaking, 125 reserves, maybe it's a little conservative, but you have all these drill holes. So, but great. So, I mean, you can basically say, look, Don, you're way too conservative here, but look, I'm using $20 silver, which is kind of ridiculous.
Sure.
Okay, so we're at 250 million, right? So if somebody offered you 250 today, that would be 62% premium. But I think you guys would still laugh, right? You're still laughing at 250, am I right?
That's right. I mean, look, we have a fiduciary duty. I mean, if there was a firm cash offer for two, of course, we have to take it to our board, and the board has to review it and do what's in the best interest of shareholders. Yes. But yeah, right now.
Well, I'm talking about a friendly takeover here, not a hostile takeover, friendly. Yeah. This is where you agree.
Of course.
Right. You and your board agree, right? Exactly. Well, I actually think, I'm hoping that your board as of today says, look, we're not for selfish. Now, look, well, you can take it to a vote, but if you and your insiders and your shareholder, if you and your board basically say, look, don't accept this bid, we're worth a lot more, it's not going to fly, right? Okay, so now it gets interesting. Now we start looking at higher prices. So if we go to $30 spot at 125, and again, 125, I think is too conservative, it jumps to 375 million, and now you're at 143. So this is my scary zone. Remember, I don't want 140% return. I want over 200%. I really want you, I just want to show you guys the difference in the valuation of your company. As this top area is a company that basically is ready to sell, is ready to do a friendly deal with somebody. So nobody's going to offer you 375 today, but in 1 year, if silver jumps to 30, they will. Once silver goes to 30, you go to 375 at 10%. Somebody's going to offer you 375, and you're going to get a 143 premium. My point is that, my investors still are not happy.
Sure. I'd say at $30 silver, I mean, there was sensitivity included in our PEA study, which was from last year. And we had showed what the net asset value of this project was after tax at $30 silver. And, I think it was $2,300 gold or something. So that was sort of the upside case scenario. And the net asset value, based on the PEA, which didn't include any of these updated resources that we're going to announce here, was over $900 million Canadian. So this project has incredible leverage. At $30 silver, the value of this project is likely over $1 billion Canadian, based on after-tax net present value. And
so if you have an NAV of, let's say, $1 billion, you said 900 million, let's say it's $1 billion, right? No one's going to pay you the NAV, right?
Sure. They'll pay a fraction of that.
Yeah, the best you're going to get, maybe 375, and that's actually on the high side. They probably want to pay, if the NAV is $1 billion, they probably want to pay 250 million, right? So it's hard. That's why my point is that if you're going to do a friendly deal with somebody and say, look, the trick here is, my opinion, is management, and management and insiders. If you guys want to hold on to this project, you can fight these guys as left and right. Now, I think you've probably been approached already. I would think that Fortuna and Hochschild are down there. I would think they're interested. Have they knocked on your door yet? And if you told them, go pound sand and come back and when silver's at 30?
So we have confidentiality agreements in place with certain parties. We obviously can't name them because that's the point of the confidentiality agreement. But yeah, we absolutely have confidentiality agreements in place, as do most companies, I would say.
Right, but
Right. Nothing unusual. Yeah.
you can't say that you've turned companies down, or you can't say that.
I'll say we're not actively engaging discussions. I mean,
Okay, that's the
think we have
same.
a tiger by the tail here.
That's
Our
yeah,
focus is on drilling, and so yeah,
yeah,
we're not soliciting companies, but
that's
yeah,
the same.
companies.
That's the same thing. When if you're not talking to them, you're not for sale. Basically, you're not for sale for a friendly takeover. Okay, so yeah, so that's a great one. So great segue here, because we're kind of segueing into the bottom slide. So at what point, let's say that you next year, silver makes a, kind of a crazy move and basically jumps to $40. I think it will. So suddenly your revenues basically at 125 go to 5 billion. And at 5 billion, somebody wants to pay $500 million for you.
Mhm.
Now, again, it's 225 today, which, it's going to drop because you're going to go up in value. So by the time that we get to $40 silver, this is probably going to be down to, less than 100%. So as a company that wants to sell, you're never really going to. Well, people could get in now. If they buy today and then you guys don't sell until 500. Then they get the two bagger, which is great. But at what point do you go into discussions with these companies?
Yeah. So I think what this analysis is missing, because this is all based on last year's resource and last
Yeah.
year's sort of PA.
I think you want to double the number of ounces, to be honest with you.
We've been drilling. I mean, this project's going to continue to grow. So it's not like, by the time we hit $40 silver, we're not going to be talking about 125 million ounces here.
Okay,
We're coming out with an updated resource estimate in October, and then we have a brand new zone. And so we want to define how big that new zone is. We want to define how economic this project is. And then that's what we're going to sort of evaluate at the time.
Yeah, excellent point. I agree with you. I agree with what you just said, Dave. Dave said, "Hey, look, you should probably double those reserves." Okay, so let's do that, right? So basically, if you double all these numbers here, if you do that, then you're going to go up in value very quickly here. And this comes to my point: at what point do you enter into discussions? So, I mean, we're going to get to your in situ value is going to get to the point where it's probably going to be, over 500 billion fairly quickly. And then, basically, you could easily be a two bagger. But my point is this: is that as you show more resources, your market cap is going to go up.
Yes.
And so as your market cap goes up, if people that don't get in early, if you got in right now, so let's just, you can double all these, right? At least these bottom two, you can double it to 300 to 450%. So yeah, in theory, you could get a 3 to 4 bagger here if you guys sold.
I'd just like to make one quick comment.
Yeah.
I mean, we have numerous very good exploration targets. Now, I wouldn't be willing as a geologist to sell the company while we still have very good exploration targets that are just dying to be drilled.
Great. Yeah, I got you there. So you want to, you're not for sale right now, and you don't want to. Yeah, I made that point earlier, and you really don't want to be in for sale until you get an idea of how big this thing is. I get all that.
That's right.
Right. I just wanted to kind of compare, and I should have. I was too conservative here. Absolutely. So yeah, but my point of showing this slide was that you need to get in early if basically to get the big returns. Because this is what the premium is going to be at today's market cap, right? 154. So the longer you guys hold out, the bigger your in situ value gets, the more return, right? Yeah. So ultimately, if you do sell, you're probably going to sell for a 40 to 50% premium. My guess is probably 40%. So I just want to show that. Okay, so let's go to the last slide here. So before we go down to this back slide, this is basically this is valuations as a producer, and boy, you jump in value if your resources go up. So my last question before we jump on the producer valuation side is, after you drill for, you're going to want to make a construction decision in 2024, right? So you're only going to be drilling for 2 more years. So at that point, you're probably at most, your reserves are going to be 200 to 250 million, right? So you're looking at double, right?
Mhm.
So if you do that, let's say that your revenues jump to, let's say 7 billion. Let's not go to 10, but let's say it jumps to 7 billion. So your revenue goes to 700, your in situ, you basically become a $700 million company. So at that point, that's a pretty darn good return, right? For your shareholders. So once you get to in situ 700 million, you're going to be pretty interested in selling the company, aren't you?
Hang on.
All right. All right.
We've got some porphyry targets, and they could make a big difference.
Yeah, yeah.
But
So
you
I'd say it's hard for us to
Right.
sit here today and say in 2 years, would it be a good time? I mean, it really depends on, like, the more we've drilled. So 2 years, I mean, Dave and myself have been involved with the company for 2.5 years now. When we started, we really, I mean, we spent 6 months evaluating this before we merged the other company we were with Abra. And we thought, you know, there were some nice exploration targets sort of at the base of the pit. And then there were some decent targets around that we were looking to drill. Now, 2 years into it, 2.5 years into it, we have phenomenal targets to the northeast, to the southwest, some other satellite deposits, and the base, and this high-grade Tesoro zone. And so the more we drill, the more we find.
Yeah.
You know, so if you asked us 2 years ago, would you be willing to sell at
Right,
200
right.
million?
I think, yeah, that's beautiful. I think this is a good exercise. So basically what I'm hearing from both of you, now I personally feel very strongly, I wouldn't be in this business if I didn't, the silver prices are going to go up substantially over the next 2 years. So I mean, I could have put $50 in here as well, but I only went 40 at the top.
Yeah.
So if we go to 40, I think, 30 to 40, I think definitely, we're talking 2 years from now, right? We're talking about second half of 2024 is when we're going to make the construction decision. I don't think you guys are going to be for sale until then at the earliest, right? So we're looking at an in situ value somewhere, minimum, right, is going to be at so let's if we use $35 silver and we go to 200 reserves, you're looking, I mean, minimum here is, 400, you're looking kind of 400 to $700 million in situ, right?
Yeah, if that's what your analysis shows. And so, yeah, I'd say from our perspective, obviously, as with those valuation levels, at that stage, depending on how big this resource is, depending on how much more value we think we can add for shareholders, yeah, at the right time, we'll be very open to discussions. And, if somebody's giving an all cash firm offer, that's obviously worth a lot more than somebody offering shares in a company that we don't really think has upside. So it's quite complicated. I've been doing corporate development for 15 years now. I've done a number of deals, and it's never as easy as just pointing out a couple numbers on a spreadsheet, of course.
Right.
So look, we'll continuously, as we grow the project, evaluate opportunities to sell the company or to partner with someone and build this, or you want to evaluate all your options. But right now, the focus is on exploration and continue to grow this, and that's going to unlock value for sure.
Right. And the whole point in my opinion, the whole point of exploration is to basically increase your in situ value, increase the value of your gold and silver in the ground. So your in situ value is going to jump significantly as you add ounces, as the price of silver goes. That's kind of the whole point of this top slide, to let people have an idea of just how far up the in situ value is going to jump, and compare that to the current market cap. So I think we've done that. Now let's look at the possible production scenarios if you guys make it to first pour. And my fingers are crossed that you do, but my gut says it probably won't happen. So let's use, I think 8 million ounces of production, 8 million. That would be if your PFS basically doesn't change. Do you think so I think that's the first question here. Your PFS is going to come out, I think, in H1 2023. Do you think that PFS is going to bump up your first 5-year production above? I think right now it's 11 million ounces, and I'm using 8. So do you think it'll go higher than 11 the first 5 years?
Yeah. So that previous study was based on a throughput rate of 7,000 tons per day, and we had already a 16-year mine life. And so now, as we're adding more tons, I mean, it makes sense to increase the throughput rate. So of course, there's a CapEx increase as well as you have a bigger plant, but that, clearly will increase production and will help lower your cash costs as well. And so, we feel.
There's a catch to that, though.
Yeah.
If you increase the throughput rate, you're going to increase the CapEx. You're going to increase the time it takes to build a mine. That's a big trade-off for shareholders. Instead of getting a mine up and running in 2025, we're going to have to wait till 2026.
So there's another approach too, where it could be a staged approach. So maybe you start off at 7,000 tons per day and you produce that for the first 3 years, and then you increase it to maybe 13,000 tons per day.
Yes, I like that a lot better. Keep the CapEx low, build this thing quickly, get the cash flow going. I've seen companies who have done that, who have basically started out with 500, 1,000 tons per day in their PEA, and then they double it, and then they double the CapEx, and they double the time it takes to build a mine. And it hurts the share price because you're just sitting there waiting. Right now, your share price has a lot of momentum because you're adding ounces. But once you stop adding ounces, it basically grinds to a halt. So I hope you do it in a stage approach. But again, I think you probably, right now, your current CapEx, the current PA is 11 million ounces for the first 5 years. So if we value the company at 10 million, at a spot price of 30, which I think is very, we're talking 2 years from now, right? So you have 300 million in revenue, and then you have break-even cost. I have it at $20 because this is 2 years down the road. That's very conservative. I think you guys will come in, it's hard to predict inflation over the next 2 years. You guys are probably 18, maybe 16. I'm thinking at least 18, but inflation's hard to predict. So we have free cash flow of 100 million. That gives you, I'm only giving you a 6 multiple because of dilution and because of, the CapEx, mainly the CapEx. So basically, this is kind of the worst case, I think, is a 3-bagger, 289. Now, if you compare that to what we talked about, the in situ value, selling looks pretty darn good, right? So it's going to be very tempting. So we have to really, let's say if we go up, you see how it starts to jump. So if we go to $40 silver, you have 400 million in annual. It says revenue, but it's actually, it is revenue. And then your break-even costs stay the same, and your free cash flow jumps to 200 million. So your value of your company is 1.2 billion. It becomes a 5-bagger. That's kind of a minimum for me. At $40 silver, it's basically a 5-bagger. But you could be a 3 to 4-bagger in situ, which looks really attractive as well. So it looks like you're a winner either way you go. Is that correct?
Well, obviously, yet to be seen. I mean, we have forward-looking statements. We can't really, obviously, we're not guaranteeing anything. But I'd say, look, I mean, from our perspective, the outlook for the company, without question, has never been more positive. I mean, we have, again, these numbers are based on a PA. Since then, we've already announced some world-class holes, and we have a brand new discovery that we haven't yet, we just only drilled 1 hole, which hit some remarkable grades. So there's a lot more work to be done on the exploration campaign, and we think that's going to add tremendous amount of value for shareholders. I think patient shareholders will be rewarded. I'd say, from where we stand today, from a risk-return basis, having a market cap of $150 million Canadian, doesn't seem, for a project that's already as de-risked as this is, I think the opportunity clearly outweighs the risk by, several bagger as you're showing below. And so there's a lot of upside, whereas, on the downside, I think we're already trading at a fraction of the value of our old PA, which is clearly outdated. So
Right.
it seems like a great opportunity, but of course, we have to be cautious, and there's forward-looking statements, and we obviously can't, guarantee the future.
Right. No, what the point that I was trying to make is that shareholders should do well no matter which fork in the road you select. If you decide to sell, they're going to get a good return. If you decide to produce, they're going to get a good return. Now, yeah, I get that you can't basically say yes, definitely, Don, because it's a high risk business. You don't know exactly, how much, for instance, inflation is going to happen. You can never predict the price of silver, the price of gold. You don't know if they're going to go up. You don't know if they're going to hit 30, 40, 50. You don't know that. So yeah, it's a speculative business. I always tell people that all gold and silver mining stocks are speculative because they're all forward looking. They're all based on the future, and they're all based on elements that normal businesses don't have to deal with. Political risk. You have all of the stuff that's required to run a mine. It's a cash intensive business. Lots of things can go wrong. But I think that we've done a fairly good job of looking at the, kind of the two different ways that you could go. And you guys really pointed out the fact that, first of all, that my plausible reserves are conservative. Second of all, that you could easily, in the PFS could recommend increasing the tons per day. Currently it's 7,000. You could basically up it to 10,000, which is more than a 30% increase. It's almost a 50% increase. So I would, it's probably going to be, if you guys do, it's probably going to be from 7 to 10 is my guess. So if you go to 7 to 10, the CapEx is going to jump up to significantly higher, probably $300 million, maybe higher than that, depending. And then
can I make a comment on all of that?
Sure.
We're aware of the increase in CapEx. A trade-off study has been done already, and the optimization has been done. It seems to us from the resources that we had before, 13,000 tons a day would be the economic optimum of throughput. However, the resources have gone up will have gone up considerably since then, and we were looking at ways to reduce early capex. And as John said, it might be a staged process. And we were looking at in the shallow zone of Oculto doing a heap leach operation, which would be considerably cheaper, but subsequent to that, and that's an ongoing process, an ongoing trade-off study, which we will carry on with. But subsequent to that, our hole 19, which is in the southwest, has hit very high-grade silver close to the surface. And it's buried by about 50 or 60 meters of colluvial material. So it's not drill and blast, it's loose material that you could basically bulldoze off, and then you're down at 300 grams per ton plus silver, and it may be a substantial resource. So
excellent points. I'm glad you brought up the fact that the optimum you think is 13,000. That was previous, so maybe it's 15,000 now. But that's scary. That's somewhat scary. That's somewhat scary to me as an investor, because you're really talking about the capex jumping significantly.
Again, you would likely do it in a phased approach. You could keep it at 7,000 tons per day, and then by year 3, increase it to 14,000 or 13,000 tons per day. Yeah. And so, there's a trade-off. That's why there's various studies, going on. Can
I just make a comment? I was involved with Olympic Dam and in the discovery of Olympic Dam in Australia, which you're probably aware of, Don, right?
Yeah.
And we discovered it, we drilled it, and it got bigger and bigger and bigger, and we were just drilling the hell out of it. And I took the directors around at Olympic Dam, and the chairman said, after we'd studied all the economics and all the rest of it, he said, well, one thing's for sure, we can't afford to find another one. So I mean,
It's
Yeah,
a nice
you know,
problem to have that your
yeah,
project
yeah.
is getting bigger.
Yeah, that new drill hole, it definitely points to a new discovery, the big one.
yes,
That points to a new discovery because that's the biggest drill hole you guys have ever had on that property. So, yeah, another good example, good analogy is Fosterville, right? Fosterville was only producing 100,000 ounces, and then Kirkland Lake buys it, and they go, wait a minute, they didn't drill over here, and it
Yeah,
jumped to 400,000 ounces at almost 30 grams per ton. So yeah, if you have a good property, you have good geology, you don't want to walk away from it. Yeah,
Right.
you want to wait. So yeah, you guys actually, I mean, when you 2 years from now, I mean, you only have two years to drill. Now you drilled 100,000 meters this year, right?
No. That's in total. That's the history of the project.
Okay.
So our drill program has been quite small. I mean, last year was 20,000 meters, and for this year it's 15,000 meters, but looking to expand that down the road.
Okay, it was somebody else I was thinking about that had this huge. Okay.
Yeah, no, definitely not. No, our drill budget is $6 million a year last year, so
Okay.
it's not big at all, really.
Okay, yeah, that's good. You guys have been conservative there on
Yes,
burn rate.
correct.
Oh yeah, and Dave, he wants to drill that near that new discovery. He's
Oh, for
ready.
sure, for sure. That's
well,
highly
the thing is,
promising. Yeah.
it's going to be very high value ounces.
Oh
It's very
yes,
high value ounces.
yes, very high grade. 87. The width was 87 meters. I mean, that's huge.
And starting
Wait a minute.
downhole
That's
depth,
just,
yeah,
that's
70
just the
meters.
first hole.
I know. It could be a lot of gold and silver down there.
Yeah.
So yeah, it's a very exciting project. Yeah, I just wanted to get a kind of a better feel for the direction, what's going. And then I wanted to let people have an idea of the future valuation of your company. It looks pretty good. I mean, the other thing that's nice is we're in the middle of a correction right now, so you're not getting full valuation. So people are get a buy at a discount.
Yeah. That's right. Yeah, no, that's been frustrating for us. I mean,
one final thing, and I'll let you go, is my understanding is that permitting in Salta is fairly easy versus the rest of the world. And and my understanding is you can actually permit this project in 12 months. Is that correct?
So we've already completed the environmental baseline study. That took 12 months. And so that's already behind us. But yeah, once we have detailed engineering, I mean, of course, you need to know the throughput. And so we're not at the stage yet where we can permit this 12 months from today. But yeah, once we have detailed engineering, we know the size of the plant, the size of the tailings, et cetera. 12 to 18 months, this could absolutely be permitting. And that's based on a number of comparables nearby, both on the lithium space, for which there is a number of projects, and also Fortuna Silver, when they completed their permitting of Lindero. That was less than 2 years in terms of that. So yeah, no, I'd say a very streamlined environmental permitting process in Salta for sure.
All right. So you talk about having a construction decision second half of 2024, but you really don't want to make a construction decision until after it's permitted. Isn't that correct?
Well, yeah. So with the new discovery, I mean, that's for Oculto itself. So this single open pit, again, there's already been the PA study completed there. We'll have a pre-feasibility study in Q1 2023. That could on its own get permitted, and you could have a construction decision there by the end of 2024, say. But yeah, now with the new discovery, I mean, drilling is going to be ongoing there. We want to see how big that is and how that transforms the project. And so things are moving forward in parallel. I mean, well, obviously we're not stopping moving forward. The permitting team still moving ahead, and obviously the pre-feasibility studies on track at Oculto. But in parallel, the exploration team, Dave and his team, are really going aggressively after the Southwest Zone.
So in theory, you get the PFS done in first quarter of next year.
Yes.
In theory, you could actually start doing permitting and the DFS at the same time. Is that correct?
Once you know the size of the operation, yeah.
Sure. And you have some, baseline sort of engineering completed. You know where the tailings. I mean, yeah, absolutely. The permitting.
And so the longer that you wait to begin permitting, the longer until the construction decision, correct?
That's right. Yeah.
Basically, yeah.
And in theory, it could take up to 18 months to permit. In theory, you're hoping for 12, but it could take up to 18.
12 to 18. Yeah, that's
So
reasonable.
That's
Yeah.
great information for the listeners.
Yes.
I think that's great. You guys answered all my question. I learned a lot. Glad
Thank you,
to have
Dan.
you guys on. I think you have one of the most exciting silver projects out there. Go Gold's valued at $500 million. Looks like your resource is bigger than theirs is. I think the economics is probably better, a little bit better at theirs, but not much, because I think your economics are going to improve because your pit shell is adding ounces, which is going to improve your economics. So, yeah, I mean, if you look at two of the best projects going right now, Los Ricos and Diablos, right? Those are kind of the two biggies. You also have Discovery as well. So those are the three big silver projects right now people are looking at. I suppose you could throw Aya in there as well. But they're in Morocco, but Western Hemisphere, you have those three. So you guys are, and you guys actually are not getting the respect you deserve for this type of a project. I don't think. I mean, when I look at how people reply to my Twitter feed, or basically how people react, they're not as excited about your project as they are about, say, Los Ricos or Cordero. But I think you guys are in the same ballpark with them, right? Would you guys? So I'll give you the final word on that, on how you guys are perceived.
No, we appreciate that, and definitely appreciate the opportunity to come here and give yourself and your viewers an update. Yeah, from our perspective, look, I mean, we're not ones to overpromise, underdeliver. I mean, we take the opposite approach. We're going to let our results do the talking. I think, clearly our exploration results speak for themselves. It's unparalleled. There's no other company out there that has delivered better results than we have, and we've done that on a $6 million budget, whereas, many of our peers have many multiples of that from an exploration perspective. And so now the market doesn't seem to have the foresight to be able to say, look, they've had some remarkable success here. What could this mean in terms of a pre-feas? And so that's not being priced in correctly at the moment, I would say. And so we'll deliver a pre-feas again and just show it, let the results speak for themselves. And again, that pre-feas is not even going to include this brand new zone. And so in addition to all of this upside, we have this new discovery that we're very keen on, as you can clearly tell. And could be a game changer for this project. And so lots of opportunities to add value here, and the results will ultimately speak for themselves, I think.
And not to mention the porphyry copper gold potential, because that seems to confuse people.
Yeah, we have another project as well, which we haven't even spoken about.
All right.
We'll save that for another time.
All right. I guess I get the final word. One thing I would love to see is that after you do the PFS, I'd really like to see a timeline, basically a timeline on the steps that you guys plan to do with the okay, this is when we're going to do permitting, this is when we're going to do the DFS, this is when we're going to make a construction. I think a timeline would be really, really useful. So that was the final word. But thanks for having me on, guys. I really appreciate it.
It's our pleasure. Thank you.
Thank you. I'll see you. Bye-bye.
Bye.
Oh, how do I stop this? Stop. No. I always forget how to do this. Here